Hi, this is Trading Bitcoin. I'm hosting today. It's Leah here with Tone Base, who is in Toronto. Tone, how was the flight?
Hey guys, the flight was very short. It's like an hour and 20-minute flight, and I fell asleep like 15 minutes into it. Next thing I know, I'm in Toronto, which is great.
Awesome. All right. Well, I will be here
I
for QA, guys.
I will say that like considering I got detained and almost not let into Vancouver, I had the complete opposite experience in Toronto, where it's just, yeah, come on in. Not a single question was asked. Toronto, thumbs up. Vancouver, not so much. You guys know you're the same country, right?
I think it's just with Bitcoin dropping, they don't think you're making as much money. They didn't want to confiscate anything this time.
All right. So let me do a quick thing. When we're doing Bitcoin like twice a day, there's really not much to say. So this is more so for Q&A purposes. Everyone loves to watch more Leah. So here we go.
I'll be
Um,
watching live chat. Thanks, guys.
all right, cool. Let me screen share. There we go. My typical disclaimer, educational tools, learn trading. In Learn Trading, I have sections 1 through 5 that are very, very traditional about the markets. Learn all you ever wanted to know about candlesticks and anything else that I deem important in trading. I did not learn everything, but these are the tools that I like. I do focus on section 6, the TD stuff. Please read it. And then if you are interested in it, please check out the consulting section of my website. Tells you how to reach out to me, how much things actually cost, or attend one of my seminars. I really meant to edit this out this morning, and I think I have about 5 seats left in Toronto, so there's still room for Saturday. And then Miami, which is actually Fort Lauderdale, but it's all kind of one and the same. So go ahead and check that out. All right. Also, tomorrow I will be speaking. I'm ready today. Tomorrow I will be speaking at a conference here in Toronto. Why is this not scrolling? The blockchain economic event. It's going to be really, really cool. A lot of good speakers. I believe I'm speaking at about 4 p.m., which is great because I'm supposed to be entering real trades like tomorrow and Friday. I'm about to miss another trading season. It's going to be very disappointing. But yeah, so I'll be there tomorrow and check that out. Then on Sunday, where did it go? Here it is. On Sunday, we're doing a little bit of a meetup. So check that out. I'm going to speak. Rodolfo of Open Dime and Mike in Space is going to say something. So it'll be really fun. It's only $10 just to cover the cost of the venue. And then next week, for those of you that are in Miami, there's an event over by Aventura, the Blockchain Nations Miami, some cool speakers like Jim Rogers, and Flip does a good job speaking. So go ahead and check out this event. It'll be also, should be a lot of fun. I will be there. There I am here. I will be speaking there as well. Cool. All right, let's get to the price. We got about 690 live viewers right now, looks like to me. Actually, let me close this. And I'm going to pop out. I want to do the live chat pop out. That didn't really work the way I expected. Okay, here we go. Just so I also see what Leah's seeing. All right, cool. Here's the weekly chart. The weekly chart is bouncing back a little bit, but we're still below this trend line. Now, I do understand that if I drop the log scale, the trend line looks a little bit different. And if I adjust it, oh, you know what? I should have made it as an array, but that's okay. So if I adjust the trend line, you know what? It's debatable if we're above or below the trend line if I drop the log scale. So I'm going to stick to log scale mostly because it's cleaner. And I like cleaner trend lines. I guess that's the best fit line. So just keep this in mind that Bitcoin is bouncing back, and that's actually a decent sign. The problem, of course, is there is no, like, I would not be trading this to the upside. There is a much better risk reward ratio to the downside, but I'm also analyzing this as a traditional trader. I, of course, would never trade Bitcoin and to the short side, and I would barely ever trade it to the upside. Oh, so I was going to tweet this out. Maybe I should say it now. No, you know what? I'll say it after the price. I have like 3 article recommendations, and I think we're going to talk about these articles maybe tomorrow or the day after. But these are my 3 recommendations that I'll get to in a minute. Here's the daily chart. So the daily chart is actually starting to look neutral. So while there were lots of signs, no, wait, that's not the daily chart. Where's the daily chart? That was the 4-hour chart. Here's the daily chart. The 4-hour chart was looking neutral. Here's the daily chart. So the daily chart today is looking good. Now, we still have about 4 hours left in the day. Let's see how it ends. Now, keep in mind, the 50-day moving average continues to decline. And if you can get above the moving average and above the trend line, we can then start discussing potentials for future bulls. However, if we can get into this area of 8,600, it's very possible that the price would be like exhausted because it had just come up from $6,500 area. I know people in crypto have very short memories. I know you guys are like goldfish. But remember what happened when Bitcoin had to go all the way up and it just didn't have enough momentum. And then we took a giant step down, okay? So if you're gonna go up, you gotta go up in steps. Gotta go up in baby steps. That's how things go up slowly and much more orderly. So while today's price action is looking good, and as a short position, just gotta you might have to take that loss in the near future. It is what it is as a trader, happens all the time. Now, it's possible that this 9 was only a 1 to 4 candle pullback and then higher. This is what I normally say on the 9s. And the reason why I felt that this particular 9 was yeah, Leah, I'll just do it now. Who am I making a mod in a live chat? Oh, where are you? Say something. Like in the live chat. Oh, there you are. I see. I hope that's not a fake Leah I'm about to make a moderator. Got it. Okay. So basically, a 9 is very helpful for a trader. It tells them that there's at least a 1 to 4 candle correction, very, very likely. The reason why I felt that this particular 9 had a much higher chance to be more than a 1 to 4 candle correction is because of the current environment of being this massive amount of resistance, especially this 9 not being able to break above the setup trend line, okay? So I have multiple reasons to think that this 9 is going to be more than a 1 to 4 candle correction. Now, if we can get above this blue line serves as a stop loss. If we can get above this blue line, then there should be no short trades on the table, and then you wait for bullish trading opportunities, okay? This is very, very different than being a hodler. And one of the articles I'm going to point you to will specifically talk about that, okay? But for now, this is a good day. I would have anticipated a bad day going into candle open. So obviously this candle is not doing what I expected it to do. The market doesn't have to do what I expect it to do. I remain bearish overall until proven otherwise. But as a trader, you have to think about cutting that loss. Okay, so just keep that in mind, the short trade loss. Plenty of time to enter the bullish trades when the market presents itself. Here's the 4-hour chart. Now, the 4-hour chart is in a channel. So if I grab a couple of parallel lines. And, you know, kind of like this. Oh, I got the magnet thing on. I don't want the magnet. Let me drop the magnet. So we got a bit of a horizontal channel here. I'm going to make it yellow. I don't know, like that, right? No, it's not really visible at all. Make it orange or something. All right, so you're in a channel here. So the good news is you did have a golden cross, and you are coming up. You're starting to exhaust your nines, right? So that was a 9. So that's 1, 2, 3, 4, 5. That's a 5. 6, 7, 8, 9, 10. So you're coming up on a 13. You're in this channel, and let's see where this channel will lead you. Now, the good news is that the 50-period moving average is going up. You had a golden cross. Now, if we hang around this area long enough, the chances are that you're going to break to the upside, not the downside. So there are starting, like, because of today's candle, you're starting to see some minor seeds for the bulls, minor. Like yesterday, someone asked me, do I see anything bullish on the charts? The answer was no. Today, if someone asks me, do I see anything bullish on the charts? The answer will be yes. Today, there are a couple of bullish things on the charts. Now, the bearish things are greatly outweigh the bullish things, but there are some bullish things on the charts. Let's take a look at, what is this? This is the 12-hour period. The 12-hour period remains very neutral. The longer we can stay up here, the better it is. See, the 12-hour period, the 9 actually broke the setup trend line, which is positive and gives you a chance for a 13 after the 9 to go higher. The 12-hour period is also above its 50-period moving average. It's also above this red line that was the breakdown level prior. So there are reasons to be slightly bullish here. Now also look at this 9. It led to a very nice 1 to 4 candle correction, even made it into a 5th candle, and now it's starting to reverse a little bit. So there are some signs for the bulls, but I would never recommend, you know, as a trader, to assume you're going higher and trade it up. I really need to get back to the traditional markets. Here's gold. I think gold's getting ready to break out. Now, I would not buy in anticipation of the breakout, but I would potentially buy on the breakout. If gold can break 1378, 1380, that would be amazing for gold to go up. Stock market continues to go up. I remain bullish. We are now above the 50-day moving average. We really want to get above the setup trend line. Once we get into the vicinity of this double top, we're probably ready to shoot back to the upside. So keep that in mind. Talked about the VIX yesterday. I don't care for the VIX. I don't understand how it helps traders at all. But hey, I can be challenged on that position. So I'm just going to close this. I still have Ethereum up. I don't know. Ethereum still looks bearish to me. You're about to get a death cross on the daily. I don't think it's going to end well. All right. I'm over. Oh, yeah. Articles. Okay. So here are your must articles for the weekend. I'm going to tweet this out. So here's Jimmy's article. I just finally read it, titled Why Bitcoin Works. The inspiration for this article was the book by Saifedean, which I actually need to order. Let me be careful in showing my Amazon. Last time I did this, I doxed my address. So let me not do that again. I got enough problems as it is. But yeah, but I read Jimmy's article, and I feel like I need to have Saifedean on the show, because there's a couple of things in Jimmy's article that he attributes to Saifedean that I kind of want to challenge when it comes to inflation, deflation stuff. And Saifedean's book is actually 300 pages. So the chances of me reading it in the next 3 years are actually kind of small. I don't think you guys realize my reading attention span. So it's, I don't know, someone's got to put this thing on tape. The moment it's on tape, please, someone send me a copy. I'll immediately listen to the whole thing. Other articles. Oh, also Jimmy's like last couple of articles before this one were all very, very good. Also, you have to read Ugly Old Goat. And I am not kidding. These were two of some of the best articles I've read in a while. And I believe he's only read 3 of them. Oh, that's the other article I was going to mention. I'll get to that in a second. So definitely put Ugly Old Goat in your reading list right here. Yes, that's his actual name. Right there. So I read his most recent one and the one before. So his most recent one is I Am Saving. And the one before that is How to Achieve the Same Results of a Professional Trader Without Taking the inherent risks. Now, he also wrote one other article. He references it at the bottom of this article. Let me just pull it up. I still need to read this one. I read the other 2, and they're absolutely great. So I'm sure this one is also amazing. So definitely put Ugly Old Goat on your reading list and read it. The other article, as my recommendation, blockchain is not the only crappy technology. Blockchain is not only crappy technology, but a bad vision for the future. I actually really enjoyed this article. So I do recommend it, and I will tweet these out later. All right. All right, Leah, what do we got on the QA side?
All right. Could you comment on the possibilities of the low probabilities we previously considered, the 1.3K to 5K after that short squeeze?
The probabilities have not changed at all. Remember, guys, a short squeeze changes nothing. If when you get a short squeeze like the one that we got, it only increases the chances that the bottom is not in. Now, okay, look. So the 6,500 or the $6,000 bottom followed by the, okay, I'm still on screen share, right? Let me get to the daily chart, right? So the $6,000 low followed by a slightly higher high at 6,500 had always had potential to be the bottom. They did. Now, I gave it a small probability that this is the bottom and a higher probability that we're going lower. By having this short squeeze, I actually raised my probability that this is not the bottom. Now, it doesn't mean that it's not the bottom. It just means that my probability has slightly been elevated, because now when we actually, if we start going down again, there's going to be a lot less people taking profit from profiting on the downside. So short squeezes like this are usually not good for actual rebounds. You want a short squeeze to happen at the top, not at the bottom, right? Like a short squeeze at the top kills the shorts, and then the market kind of crashes, right? So for the bull, you want something like this to happen near the top of the market so you can actually exit. Like this is the time for professional traders to get out of their bull positions. So you kind of want these things near the top, not near the bottom, so that bulls can get out and then the market falls. Like usually after short squeezes, the market actually goes down. So the only thing that, and I'm not a big fan of this pattern because it doesn't happen often, but I would say that the only thing that this can potentially remind me of is the Adam and Eve trading signal. So if you Google this and you go to images, so here is the Adam and Eve trading signal, okay? But look what happened then after, right? Like this is what I'm kind of, I mean, it's not gonna, I hope this doesn't happen in Bitcoin because that would be really, really bad, right? But like as a pattern, this is almost like what you're seeing, and here is your short squeeze. I don't know if I can, I don't know if you guys can see, I don't know if I can zoom in on this really. But a pattern like this, yeah, it's bad when you click on these things. So I can't really like magnify this much more. But I'm sure everybody can see it. So, and then you get this short squeeze and then you go up. But I'm expecting this. I'm still expecting it to go lower. Like I'm not expecting this pattern to reverse and go to new all-time highs. So I don't know when it's going to end, but I'm still leaning more bearish than bullish here, even though we could go up above the prior high. It's possible, right? But we probably will not get to this high. So in terms of Bitcoin, we could go up past this high here, but the chances of us going past this, I mean, we can go up past this high as well, but then I would become way more bullish. Like I'll be bullish in this vicinity here already. And it would be unfortunate if we go all the way up here, I finally turn bullish and we go down. But it's possible that this is the situation, but I remain of the belief that it's going to get lower. All right, next.
Have you noticed that around 60 RSI is acting as resistance on the Bitcoin daily chart?
No, let me take a look. And by no, I mean I haven't noticed. Let's take a look at the RSI. I mean, we don't need the price to look at the RSI, right? Yeah, I see it. I see it. Here's the problem with using that for your trading. When you recognize a pattern like this, that's when it actually tends to break. So I would not be surprised if the RSI goes to overbought, and then we go back down. But we did break the the downtrend of the RSI. I noticed it. I'm noticing it now. I'm noticing that 60 is resistance, but I don't know what it means, right? Because if we have an update tomorrow, we're gonna break the 60. So it doesn't really mean much. All right, move on.
Do you think Bitcoin price follows hash rate or Bitcoin hash rate follows price?
Both. I don't really think one follows the other. I think they both follow each other. If anything, Bitcoin hash rate probably follows price more often than. I mean, you can't separate the two. It's like separating Bitcoin from a blockchain. They're the same. They're the same. Oh, guys, but I'm really liking this apartment, actually. I'm in this little studio apartment in Toronto here. You can see it behind me. It's actually really cool. Like, nice little couch. Looks cool. Got like a giant jacuzzi bathtub, too.
Is that what you're going to show next? All right.
Could. Want to see a giant jacuzzi bathtub?
If you would not be able to, I like this one. If you weren't able to use the TD indicator for some unforeseen reason, is there another indicator that you might use with a high degree of reliability that you believe has a high degree of reliability?
Well, let me, okay, so yeah, everything else that you see on my charts, right? So, for example, I only started, the first time I ever pulled up the time indicator on Bitcoin was the week of June 5th, 2017. And I've been doing Bitcoin technical analysis starting in Cointelegraph I think since July 2014. So between July and June, so like that's 3 years. So I spent 3 years doing technical analysis on Bitcoin without this indicator, and I've only been using it the last 9 months or so. So of course, everything else, I mean, you don't have to use it. It's just another tool. I just like, I knew it from back in the day. I didn't really have access to it ever since I lost my Bloomberg terminal years ago. And I then saw someone had code for it in TradingView. I threw it on Bitcoin. I saw how useful it was. And then I started writing my own, saw how difficult it was to write the code for Pine, hired a developer to help me do it. It's just another tool, guys. I mean, I'm focusing on it mostly because no one else is. There are no TD experts in crypto. Maybe 1 or 2 guys that know how to use it besides me. Because of me, a lot more people know how to use it because they've studied it by this point, right? So it's kind of how I made my, like how I elevated my name a little bit by talking about something no one else is. But yeah, everything else in sections 1 to 5 of my website has nothing to do with TD. So go to learn trading, and I spent years as a trader, not using TD. To be honest, I haven't really used TD all that much in my trading. By the time I started using TD, I had already moved on to options and spread trading and stuff like that. I just like learned it from professionals, and I saw them using it. But I was always a little busy. I mean, I've used it, I paid attention to it, but I never entered positions solely based on it like a lot of the traders that I knew. But it's a very good tool. It's just not accessible by most people. And even your broker is not going to have it, right? So when I was trading with multiple brokers, from Interactive Traders to Options Express to IB Brokers I was with, which got bought out by somebody, I already forgot. But like they don't have that tool, so I couldn't really use it much. I had to, and I was lazy, and I have to look at multiple charts. But yeah, you don't have to use it. It's a good tool though. All right, next.
Do you use the Mayer multiple to trade, and what do you think of it?
No, I actually haven't had time to really read into the Mayer multiple. I think it has something to do with the 200-day moving average. Let's drop screen share for a minute. But I haven't really, I haven't looked into it. I really need to check out Trace Mayer's work. Like I'm not entirely sure what the Mayer multiple actually is. I haven't had time to look into it.
All right, and you can even guess who this question is from. If gold breaks above 1,400, will Bitcoin drop below ascending trend line?
No, I don't think they're inversely correlated, right? I mean, if Bitcoin will go up for the same reason that gold will go up. I just think Bitcoin is a much better asset. I just think Bitcoin is a much better asset than gold, but they're going to go up for similar reasons, right? People want another, an alternative to fiat money. It's just that Bitcoin is actually useful in commerce where gold isn't. And and also, so there's a couple of things, right? So there's high-level correlations and low-level correlations, right? So when it comes to low-level correlations, we're talking about, things like sector rotations, right? So like the tech sector has been booming, the energy sector has been destroyed over the last, several years. That can rotate, right, to where, we recently saw some major drops in the tech sector and people rushed into the utility sector. But all stocks are private assets. So when all stocks are going up, they're all going up. Some go up, some sectors go up faster than others. On a higher level correlation, stocks and gold are private assets versus bonds and other things which are public assets. So there are times where people trust the government less and people trust private assets more. So people will buy private assets like stocks. Now, you have to remember that gold and stocks both crashed in 2008 because when people lose their jobs and the economy is collapsing, people don't buy gold, they sell gold, right? Whatever gold they have, whether it's, jewelry or gold teeth or whatever, right? I mean, you sell whatever is valuable to feed your family. So when things get really, really bad, people will dump their gold as well, just like they will dump stocks because they're scared of a crash or bad economics. Bitcoin falls into that zone. Like it's better for Bitcoin that the economy is doing well. It's not better for Bitcoin that the economy is doing bad. Because when the economy is doing well and people are getting promoted and people getting corporate stocks that they cash out, they have the extra money to buy Bitcoin. They have the extra money to buy gold. They have the money to diversify. So gold going up is a good thing for Bitcoin, not a bad thing for Bitcoin, because guess what? I still have a bunch of gold coins and a lot of silver because I was listening to people like back in the day, like Max Kaiser and Ron Paul, and I can name other people, even like somebody like, I don't want to name names because I don't want everyone to go watch these people, because I kind of don't watch them as much anymore. Even people like Gregory Monorino and Greg Hunter. Yeah, I've seen all these guys. I mean, I knew of Andy Hoffman back in the day. There's a lot of people. Peter Schiff. I was listening to him a little bit. Right. This is back in the day. This is back in like the early, 2010, 2011. Instead of buying Bitcoin, I was like buying gold and silver and stuff. Not at the top. Not at the top. It had already like after the peak. So I still have a bunch of silver and a bunch of gold. And guess what I'm going to do with that silver and gold if the price of gold and silver goes up to like $2,000, $3,000? I'm selling all of it and buying Bitcoin. Okay. So gold going up is not bad for Bitcoin. It's actually good for Bitcoin because there's a lot of people sitting on gold and silver waiting for all-time highs to sell that shit. Okay. So keep that in mind. So I'm kind of happy. I'm very happy that gold's going up. All right.
I think you actually had some gold grills in CoinDaddy's last video.
Oh yeah.
So maybe it'll go into that. Since you gave up on your miner, I'm happy about this one. Since you gave up on your miner, what are your thoughts on miner hosting co-location mining, where a company hosts your miner units for you in a data center?
I think it's generally a bad idea, mostly because, okay, it depends. I need to do an entire crypto scam episode on cloud mining, right? I mean, you're talking about cloud mining. Let's call it what it is, right? You have a lot of problems there, right? So, no, you know what? I'll save it. I'm going to do an episode, I promise. But basically, if it's actually a center that you can walk into and check upon it, then it's not. Then it's okay. You just have to outsource the maintenance of the miner. Like if you're outsourcing the maintenance of the miner, it's fine. But if it has this Ponzi scheme-ish, multi-level marketing aspect to it, it's going to blow up as a Ponzi scheme. So you got to be real careful of who's hosting it. So be real careful with that.
Do you think gold and stocks and Bitcoin will ever consolidate on one exchange?
Well, no, that's regulatorily difficult, right? I mean, they already are in a way, right? I mean, you can buy S&P futures, gold futures, silver futures, oil futures, and Bitcoin futures from CME, right? So in a way, you can trade all of them through one exchange. But it doesn't matter that they're on one exchange because you're not actually trading on the CME. You're trading with your broker. And that's the difference. There's a difference between your broker and an exchange. Your exchange accesses your broker. So it doesn't really matter where this stuff is. And you want it to be decentralized. You don't want one exchange responsible for everything. So you don't want that.
Is it possible for the alts to keep going higher and Bitcoin to be short-term bearish?
Yes. It's like asking me, is it possible for the general, for more stupid people to get involved in crypto than smart people? So the answer is yes.
Do you see a bearish?
Wait. Let me be less trollish here. Now, there is absolutely nothing wrong with trading shitcoins. I want to make that very, very clear. There is nothing wrong with trading shitcoins. Just like there is nothing wrong with trading penny stocks. The problem happens is when you have a stock that's worth 25 cents and the stock does everything that Google does in a way, or they claim to do everything that Google does, and the stock is worth 25 cents. And you're out there making YouTube videos that you should sell your Google stock and buy this thing because it's going to destroy Google. That's where the problem and the scam comes in. If you're simply trading, I don't care what you trade. I don't care if you're a manure trader. Like, it doesn't matter. If you have an edge as a trader, you trade it. The problem happens, and the SEC has cracked down on a lot of the lies in penny stock newsletters, but you can't stop them all. So all I see from these altcoin believers is the reincarnation of the penny stock traders of the 90s and 2000s, and probably before that. So there's nothing wrong with trading that stuff. The problem is convincing people that, you know, again, a 25-cent stock is gonna destroy Google. That's where I have a problem.
How do you explain the surge of altcoins every time Bitcoin is consolidating?
People get bored and they're addicted to trading and leverage and gambling, and they want to trade something with way more volatility. And it's not easy to short altcoins, and no one really has the altcoins to sell them. So when people get into Bitcoin and they get addicted to trading, what happens is Bitcoin goes flat. They want to get that fix. So they go into altcoins. So the initial instance is to buy the altcoin, pumping the price of altcoin. So this makes total sense. I would say that online poker is greatly responsible for this. Online poker has started paying out in Bitcoin a while ago, and so many poker players have now discovered Bitcoin, and then they slowly discovered trading, and then they've discovered altcoin trading. So a lot of this money is coming in from the gambling space into the hands of already gamblers who are, probably good poker players. And good poker playing skills are transitioned very well to being good traders. And they end up sitting on this Bitcoin because they probably don't want to cash it all out. And then when they get bored between playing poker and holding Bitcoin or trading Bitcoin, they move on to altcoin trading. And the first move you make as an altcoin trader is you buy an altcoin in order to trade it. So it actually makes perfect sense that the altcoins are pumping, but there's absolutely no fundamentals there of the viability of the coin.
Do you think there's a dollar rally likely in the next few months?
I don't know. I haven't looked at the dollar in a long time. Let me pull up the chart of the dollar. I'll take a look. I'm actually getting really hungry. I realized I haven't eaten today. That's not good. We'll do that right after the show. Let's take a look at the dollar. US dollar, I guess we'll do weekly and daily. Let's look at weekly. Oh, we're on a 13. Wall Street loves their 13. We had the def cross, but the price wasn't in the vicinity of the def cross. I can see a rally. We almost hit a 9, got to a 1. I can see a rally here a little bit. I can see that the bottom could be in. Now, guys, remember, the dollar has gone up a lot since 2014. So I should probably throw some Fibonacci's on there. Oh, wow, you guys see the divergence right there? I must have pointed it out at some time in the past. Here's your price went significantly higher, and your momentum clearly went lower. Wait, hold on. Let me go to the daily chart. Yeah, so I wonder what the Fibonacci's will look like here. I'm actually not sure where to draw the Fibonacci's from, because there's always like lower lows. Guys, the dollar is not that bad. We're still oh wow, look at those 9s.
Tony, you do know you're not screen sharing, right?
Oh, I'm not? That's not good. There's more time for people to look at you.
Yeah, right. There you go.
All right, where was I? Yeah, so check out these 2 9s, right? This is back in 2009. Nice calls. So here's what I'm gonna do. I'm gonna grab one of these. I'll make it orange. I'll do a best fit line. I have some kind of Fibonacci there, which is interesting. Oh no, it's the current price, sorry, but there is a Fibonacci there. So I'm gonna take this prior high. Let's just grab it from there. I'm going to zoom out. Take this 2009 high. And we're kind of back to it. Literally right at it. So I do like it. Like, I don't like the def cross, but I think we can bounce off the 13 here. So, and this is weekly, by the way, guys. These are weekly candles. Let's take a look at daily. Oh, daily is coming up on a 9 tomorrow. Yeah, I can certainly see a bounce in the US dollar. Absolutely. I got to check a message here. Hold on, guys. Do I have to meet people at 5 or 5:30? 5:30. Okay, cool. I got a few more minutes. Yeah, I can definitely see it. You got a 9 coming in tomorrow, and you have a weekly 13. So yeah, I can definitely see a bounce in the dollar. All right, what do we got?
Do you see bearish divergence between the last two highs?
Of what asset?
Bitcoin.
And what time frame?
Not noted.
You guys got to be more specific, right? So, well, there's no such thing as, because, okay, so here's the confusion, right? Like, you can't have bearish divergence with the highs. You can only have divergence with the lows, right? Because when you're going lower, like, lower highs can't actually give you divergence. It's lower lows with a higher momentum reading, or higher new highs with momentum. So we would need a higher high than the prior high to give us some kind of a divergence. So that question doesn't exactly make sense to me. Yeah, so let's move on, maybe next time.
Here's your last one. If you didn't possess any Bitcoin at all right now, Tone, would you buy in at this moment?
Oh, if I had no Bitcoin right now?
You have no Bitcoin. Would you buy in right now?
Yeah, what about yesterday? Like, not because there was a low yesterday, because just like, I always say, when do you buy Bitcoin? You buy it yesterday. Yeah, I'd buy it right now. Please read this article by Ugly Old Goat. Where is it? This here. So he talks about, if you had put $500, if you had put $500 into Bitcoin every month, starting with the peak in 2014, he didn't cherry pick the low. He went and cherry picked the prior high. If you had to put $500 into Bitcoin every month, just 500 bucks, like you pay your mortgage, last month, you would have invested $26,000 into Bitcoin, and you would have $411,000 equivalent in Bitcoin. So the answer is yes, I would absolutely buy Bitcoin right now if I didn't have any.
All right, Tone.
All right, we good?
We're good.
Awesome. Hey, thank you guys for coming in and watching us. Once again, oh, forgot to mention it. But if you like my work and you want to support my work, please check out the affiliates and referral section of my website. Lots of discount codes here. None of this costs you anything extra to use the links. And please check it out. All right. Oh, wait, I'm not screen sharing again. God damn it.
You're off screen. Now you're screen sharing.
There it is.
There you go.
There's the affiliates and referrals. It's right there. So go ahead and use any of these links. I'm going to try and put some more stuff on here. I believe I got a couple of sponsors for my seminar here on Saturday, like Open Dime and one of the exchanges. So I'll see if I can get some affiliate codes from them, and I'll throw them on here for you guys. Okay, I'll try to ask them to be discount codes. All right. So thank you so much for watching us. Thank you, Leah, for taking time out of your day. I don't see Thor. Is he in the room?
He's not in the room.
He's not in the room. All right.
He's too crazy right now.
All right.
Everybody, thank you so much.
Bye, guys. See you all tomorrow morning. How do you stop this?